Thank you, Mr. Chairman. On September 7th, 2008, then FHFA Director James Lockhart stood jointly with then Treasury Secretary Henry Paulson to announce that Fannie Mae and Freddie Mac were being placed into conservatorship. In describing the situation as a timeout, Secretary Paulson stated, "We will make a grave error if we don't use this time out, to permanently address the structural issues presented by the GSEs. In the weeks to come, I will describe my views on long-term reform. I look forward to engaging in that timely and necessary debate." It seems unlikely that anyone envisioned the timeout lasting 5 years, costing taxpayers nearly $190 billion. Further, during this timeout, we still have not had that timely and necessary debate, and I thank the Chairman for getting us into that process now. These conservatorships were designed to be temporary, but with each day that passes, Fannie Mae and Freddie Mac become further entrenched within our government. According to the most recent conservators' report, Fannie Mae, Freddie Mac, and Ginnie Mae controlled 100% of the mortgage-backed securities, or MBS, market in the United States during the first 3 quarters of 2012. 100%. Since 2008, these governmental entities have controlled no less than 95% of that market in any given year. Simply put, much of the private market hasn't been able to re-enter the market and compete with the federal government. Due to monetary policies of the Federal Reserve and their buying large amounts of mortgage-backed securities, due to that, those able to obtain credit are not yet fully feeling the effects of a market lacking private participation and innovation. Presumably, though, this subsidy will someday end, and at that time, all consumers will suffer if our markets have not been allowed to evolve for an extended period of time. An equally disappointing byproduct of the current situation is the growing urge by some to use the conservatorships as piggy banks. 2 years ago, the guarantee fee charged by Fannie and Freddie was increased, not to insure against risk, but to pay for an unrelated tax cut. This increase, which is nothing less than a hidden tax on home buyers, will last for 10 years, even though it paid for a tax cut that lasted only 2 months. Unfortunately, the proposed Senate budget that we are currently considering would further extend that tax to pay for new spending. I was pleased to see a bipartisan group of senators from this committee, Senators Corker, Warner, Vitter, and Warren, who recently introduced legislation that would prohibit this. I too have long had concerns about this, so I am glad to see that we have a bipartisan consensus building against this practice. Hopefully, together we can correct this wrongful policy on the floor. However, regardless of that outcome, this new attempt reminds us of the importance of ending these conservatorships. It's my hope that this hearing can serve to reignite discussions on how to proceed with reform of our nation's housing market. There has been little movement on this since the administration released a brief white paper more than 2 years ago. Within the administration and across this committee, there is certainly a wide range of views as to what would be the optimal solution. Some of these differences will be discussed today, and that's productive. However, for far too long, our differing views as to the optimal solution seem to have prevented substantive negotiations from even starting. While it's true that today we do not even agree on what should be the final product, this should not preclude us from beginning negotiations or even jointly identifying problems in today's market. Mr. Chairman, again, I thank you for holding this hearing, and I stand ready to work with you, and I'm eager to begin necessary bipartisan negotiations that will help us to end these conservatorships. Thank you.